down my trade from this morning. I'm just going to start out with some notes that I had on my Telegram here. So I was saying this morning at 8:36, there's some nice bearish price on futures this morning, and I wanted to see if it was the real deal or if it was a fake move. Around 9 o'clock, I'm just going to read these out and then I'll go over the trade. Around 9 o'clock, I was saying that on futures, the 1 hour chart is beginning to sweep the 1 hour external range liquidity. And I was saying I don't think that price will drop further. And I pointed out that the high at 7:45 a.m. is very important. I'll show you why that is in a second. Around 9:50 or so, I was saying that the S&P was lagging behind Dow Jones and the NASDAQ because NASDAQ was dropping really hard. I don't know if something had, like if there was an earnings report that came out negative. I don't really keep up on that stuff at all. But NASDAQ was dropping a lot harder than the S&P, and the Dow was starting to follow behind. But I was saying I am still waiting for a long entry. Because there was just a lot of buy-side liquidity built up, right? So the world was selling today. A lot of people were selling after market open, going into 10:30, but I wasn't convinced at all. I was looking at the levels of liquidity, and so I just waited to target that. And I was saying that the S&P had already entered a daily buy-side level, so that NASDAQ didn't need to do that. So at the time, I was wondering, why is NASDAQ dropping like this when the divergence has already happened, right? We don't need to go back down into that daily level on the NASDAQ because the S&P already reached into it. So I was watching it very closely. And at 9:57, just prior to 10 a.m., I was saying that time and price are slowly aligning. And then 11:43, I was out of my trade. So let's take a look at this daily chart and let me show you exactly what I mean by NASDAQ not needing to go lower. So if you look over here on S&P, I have this daily level right here, which is a daily buy-side imbalance. That price reached into Tuesday, just yesterday. But if you look at that area on NASDAQ, that did not happen. Tuesday did not drop low enough for price to get into this area. So the thing is, when this happens, it doesn't necessarily mean that both markets have to do the exact same thing in order to have an internal to external setup. I personally look at this as divergence between the two markets, where all this is saying to me is that NASDAQ in relation to S&P, it's stronger. It's the stronger market between the two, whereas the S&P needed to drop down and grab more liquidity, but NASDAQ did not. All right. So I still look at this as completely fine if it doesn't happen over here. With that being said, my attention was more so on the S&P because the S&P was the cleaner market to me. So you can see how coming into today, we really moved around the week open. So if I drop down to the 4 hour, I have this rolled back into replay, but I will need to push this back into the bar. At the time, my focus was on a very small 4 hour buy side imbalance because again, I was looking for longs and I was looking at this area right here. And as you can see, price kind of played around it for a couple hours and then we started to push lower. And the same gap was over here, except we kind of blew past it. We blew past this buy side imbalance early on. Into the morning, and price was looking like it was going back towards the daily level, right? You can see just how close the daily imbalance is over here on S&P, and over here on NASDAQ, it's a little lower, all right? But I was saying to myself, like, why? Like, price doesn't need to go back down there. So if I drop down to the 1 hour, I will show you some levels that I was watching. Now, here's the thing. Take a look at this high right here. When I was watching the market, this 4 hour candle was open. So this is the 6 a.m. 4 hour candle. This candle closes at 10 a.m. But as you can see, we already have a potential sell side imbalance right here. If this is confirmed, then price is likely going to try to come into this area to test it. But when I was looking at this, it was after 8:30. We're still inside of this open candle. But in my chat, I said, mark out your 7:45 a.m. high. Like I was saying that area is very important. The reason for that is because this is the high that price needs to breach in order to enter this sell side fair value gap if it was confirmed. All right. So I'm just going to mark this high out and then we'll drop down to the 1 hour and I'll show you what I was looking at. So here on the 1 hour, I'm just going to remove that 4 hour fair value gap, the buy side gap, so you can see things a little bit more clearly here. All right, you can see that this right here, this last candle is 8 a.m. All right, you can see how price is underneath the week open. Okay, and we've already taken out London session low. As you can see, we have London session high up here at 3 a.m. But take a look at this. Prior to market open, on both markets, we had price enter a 1 hour sell side imbalance right here. You can see how that looks on both markets. The time was 7 a.m. when price entered this imbalance on both markets. And then the very next candle at 8, we hit external liquidity down here at 6 a.m.'s low. All right. So the market completed this internal to external setup, and external liquidity was at this low. I'll draw that out. Now, if you take a look at the chart on the left, there is a high, a swing high with a line that says 4 hour. What this line represents is the high of the 4 hour 6 a.m. candle. This is that candle that if price can stay below this line by 10 a.m., then we will have a confirmed 4 hour imbalance. So this is a large area of liquidity that I was watching for price to deliver back into if we could stay below it going into 10 a.m. when this 6 a.m. candle closes. So after seeing the 1 hour go from internal to external, the very next thing I was watching was how we closed or moved around this external range low. So I'm going to drop down to the 15 minute. And what I noticed from here was something very similar to the 1 hour, where we started getting new imbalances going to the downside on the 15 minute chart. You can see that gap right here. So I have that marked out by this gray box on both markets, but I do also have one that was on the NASDAQ here on the right that was also very small. You can see I drew out the lines here, but this was not visible on the chart on the left. It's just not there. All right. But price is entering and reacting off of the lower imbalance here. So here's the thing. Price right now is just dropping. It's just going lower and lower. I don't want to sell when we've been selling all morning. Everybody's selling. You know what I mean? So I'm waiting patiently to see, okay, I got to remember I have a daily level that's already been tested on S&P. There's divergence with NASDAQ. I have no reason to be looking for sells right now, especially when we've already been selling in the morning. The best time to sell was at 7 a.m. But now it's market open. I don't want to get into any sell positions, right? I don't trade before 9:30. So I'm waiting. In order for me to have confirmation to buy, I need price to shift structure. But what I'm looking at right now is I'm seeing 1 hour bearish gaps hold. And now I'm looking at a bearish 15 minute gap that could also hold. So I'm not going to jump into a buy until I start to see things invalidate. Here's what happens. As price goes into this 15 minute bearish imbalance, take a look at what it does. Very quickly, we go into the 15 minute area and then hit external liquidity here for this 15 minute level. And I'll draw that on both charts. Now in the recording, I was saying that NASDAQ is just continuing to go lower. I don't know why it's going lower, but the S&P is barely co-signing the move. Look at how this 945 candle closes well below the previous swing low, but look at how NASDAQ is just sweeping. It's just sweeping the lows with these wicks. So I'm not convinced that price wants to keep going lower. So I continue to wait and I begin to start to watch the 5 minute. So if I drop down to the 5 minute, so I want to recap before I continue on. We're here on the 5 minute. What am I trying to do? I am anticipating a reversal. At 7 a.m., the 1 hour chart showed price action going into a sell side imbalance and delivering lower to external liquidity. Then on the 15 minute, we saw something very similar. Price entered a 15 minute sell side imbalance, and that was done at 9 a.m., around 9:15 a.m., and it too delivered to external liquidity. Now I'm here on the 5 minute looking for the same thing. If you take a look at 9:15, we had a confirmed 5 minute imbalance on both markets. Here's where these two markets will differ. At 9:35, instead of holding the imbalance, the NASDAQ actually spikes higher and takes out the high at 9:05. But if you look at that same area, you can see that the S&P could not get above the previous swing high. And I'll draw that out. When I saw this happen, I completely invalidated the 5 minute imbalance on the NASDAQ, and I focused more so on the imbalance on the S&P since it was still valid. So what I'm looking for here is to see if the 5 minute chart on S&P can hit external liquidity down here at 61.30. If not, I would be anticipating a candle closure above these equal highs here. And these equal highs are from 935 to 940. In the recording, I actually put on here that I was looking for a candle closure. That's when I would enter, but it never got to me until later on in the day. So let me show you how that looks in replay. You can see that the 5-minute does hit external liquidity, but take a look at these markets. NASDAQ is extended to the low, whereas the S&P just wasn't showing me the same strength. It wasn't showing me that type of weakness going to the downside. So here's what happens next. Right here at 10:30, you can see how price pushes above those equal highs. Take a look at how NASDAQ goes into a small 5-minute imbalance, a new imbalance. We do get an attempt to follow through on this single bearish candle, but instead we just push higher and close well above it. Now that we have a candle closure above this previous swing high, which is a fair value swing high, and you can see this, the exact same fair value swing high over here has been closed above. I placed my entry right on that line. My stop loss went below an old swing low where the damage was done, right over here, because to me, if this area was the liquidity grab, then price was unlikely to go back below that old swing low. And then I targeted 2R. It took me above my intended target, but I'll show you that. My target was that 4-hour area, which was a confirmed sell side inefficiency. All right, and you can see it's pretty high up in the range above that level, but I was okay with that. I just, I was gonna stick with the trade regardless of, if it got up there or not. But here's what happened. If I hit play, price does come right back on the very next candle. You can see that at 10:35 I was in the trade targeting that 4-hour level. I was out of the trade at 11:40, but here's what I want you guys to see. Price did pull back into another 5-minute buy side imbalance, and you can see how far beyond that area we went. I could have easily been stopped out if the spread opened up here, but fortunately, the trading gods allowed me to just cruise on by. I'm not going to sit here and say I knew how to stay in this trade and I knew how not to get stopped out. That's not the case. Price could have come back here, but logically speaking, it did not happen due to the trap traders being below this level. That was my trade for the morning. Here's the recording.